Velorum. So as the film prices go up, their income goes up and nobody questions them. And airport charges are also going up because of the new airport, the investment that are taking place. But it'll take time to stabilize. But what I would say is very clearly,
Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand all the latest cues from the day's trade in the way that the stock markets are trading right now, the benchmark index moves as well as the sectoral moves as of now. Also the stocks that are buzzing the most in trade and what should be your investment strategy as the markets bounce back and approach the record levels now. How soon will the Nifty really climb those levels and what will be the focus that all the experts are really advising investors to have now? All of that will be the focus of this discussion, but first up, a quick check of how the Nifty and the Sensex are moving at this hour. Well, half time through and you can actually see the Nifty and the Sensex really inching towards those high points of the day. 180 points uptick for the Sensex right now, 61,456, 1867 now approaching for the Nifty 50. 50 points up in trade, about 0.3% higher for both the Nifty and the Sensex. The broader markets are also participating, in fact doing much better than the benchmark indices at this point in time. From the last two odd sessions, we didn't see much participation coming in from the small caps, but they are leading the way, 0.8% of an uptick. What's not participating is, interestingly, the Nifty Bank is flattish with a negative bias as of now, with PSU banks also absolutely flat and lackluster in trade right now. But it's the IT stocks that continue their upward run, shining bright, 1.8%, leading the way. The major indices are at this point in time. The Nifty Bank overall is now flat with slight positive bias. All the sectors of the Nifty now up in the green. Talk about the realty pack, that's seen a sharp recovery, 1.2% uptick for this one as well. Apart from this, you also have slight gains coming in on the pharma pack today. Very slight moves on the upside for the FMCG pack and also for the metals pack. Metals are shining bright, 0.8% of a move on the upside. Autos are actually just 0.1% higher in trade. What's slightly weaker right now is the financial services. Perhaps that's what is pulling down the Nifty Bank into the red zone in the current moment. Well, if you see the market breadth, it is favoring the advances with 32 advances to 18 declines when you talk about the Nifty stocks. In terms of the gainers right now, Tech Mahindra, second day in a row, sharp move on the upside, 5.5% uptick for this one. ONGC up 4%. Apollo Hospitals, Nestle after a strong Q4 show is up by 2.2% odd. Asian Paints is up by 1.5% as well. What's not contributing to the markets today? Again, HUL drags for the second day in a row, about 0.5% lower. BPCL is seeing a cut of 1.5%. Bajaj Finance is down. HDFC Life and Ultratech Cement, the other stocks that are down in trade as well. But time now to welcome our guest for the day. Kranthi Bathini joins in from WealthMills Securities. He's the Director of Equity Research there. Welcome, Kranthi. And thank you so much for taking the time out for this discussion. Well, finally, some momentum building up into the markets after that sideways or a range-bound move that we've been seeing for a long time, almost 2 months or so in the markets. It looks like they are making an effort to break out of this range. How do you see the current setup of the markets? Where are you most bullish on in this environment?
Actually, as you rightly said, market has break that range of 17,500 to 18,000 range. Of course, Nifty has been spending some time and it's in a consolidation phase from past, of course, the entire month of Jan and the first week of Feb, markets are in a consolidation phase. Right now, as and when market goes above 18,000 level, of course, it's a psychological level for the markets, which gives a positive impression for the traders and also for the investors. Right now, markets are still, the consolidation phase can continue for some more time. There is not immediate urgency or any kind of immediate positive triggers are not available in the market. Market is going to be in a consolidation phase for some more time. What is crucial for these markets? We need to purely look at the global cues, how the global cues are going to pan out, and also the FII flows towards Indian markets. So these are the major triggers for the Indian markets to going ahead. Of course, we have some corporate news that are coming, creating some kind of buzz in the markets in a positive way. But we need to see this is going to limit for the stock specific action is concerned. So going ahead from here onwards, we are going to see a stock specific action in the market. but we need to look for the levels. If the Nifty could able to break the level of 18,300, that's where the major resistance levels for the market, because in the previous months also, whenever Nifty could able to come at this level of 18,200, 18,300 levels, that's where the profit booking is coming. So right now we could able to see some kind of stock specific action in the markets in the coming few weeks.
Absolutely. So stock specific moves that we can expect going forward from here. But let's talk about first the Adani Group of stocks again. Again, some news developments coming in there, and I wanted your viewpoint on those. One is that the MSCI has postponed the weight reduction of select Adani Group companies to May now. Now, what does this really mean is what I want to ask you. Global Index MSCI has deferred the reduction in weightage of the two companies, Adani Total Gas and Adani Transmission, to its next review in May from the current review that was earlier planned this month as well. What does it really mean? Does it mean that, perhaps for now, it looks like any kind of a threat to or a knee-jerk reaction is immediately postponed to May as of now? And the other two news bits on Adani Power, for example, the 7,000 crore deal to buy DB Power assets has also fallen through. What does that mean? And also on Adani Ports as well, by which will discontinue lending money to the non-group companies after having lent at least 12,800 crores last year, and that is according to some of the news reports that have come about. How are you looking through and scanning through all of these news developments? Do they immediately have an impact on the stock prices, and does it change the way investors should approach these stocks?
Sakshi, first and foremost is the changes in the weightage with respect to MSCI index is not going to have any fundamental impact with respect to the stock positioning is concerned. Whereas as MSCI again came back and they're postponing the decision, it's going to have an immediate positive impact. It will not have any positive impact on the stocks. So the fund flows are mainly with respect to the demand and supply for these stocks. Fundamentally, it will not have any impact on the fundamentals of the companies are concerned. But right now, what we can see is there is a mixed kind of news that has been coming with respect to Adani Group shares. One day the positive news, the other day some kind of negative news that has been coming with respect to the Adani Group stocks are concerned. So what a investor should look into at this point of time, whether they can seriously consider Adani Groups in their portfolio. As I kept on repeating, these are the stocks which are for the high risk appetite investors. There is some value. We can see some kind of stocks like Adani Ports and the group companies like Gujarat Ambuja Cements. So the Ambuja Cements and all, for investors with a long-term horizon, definitely they can look into that group companies. Still, the negativity is not over with respect to Adani Group shares are concerned, because we need to wait and watch how the dust is going to settle down in the coming few weeks, and also how the company is going to manage their kitchen, manage their group corporate governance. This is extremely crucial going ahead with respect to Adani Group companies are concerned.
Right, absolutely. You know what I also wanted to ask you was, interestingly, the Nifty is back at those levels when we actually saw the Hindenburg crash happen. So the levels are already there on the Nifty now. 1863 is what we are seeing currently on the index. Does it mean that the markets have been able to digest most of the negative news flow from the Adani Group of stocks, and now maybe they will be focusing on the own fundamentals and several other triggers that may have an impact on the trajectory of the Nifty going forward? And can we also hope that the Nifty is well on course to also retest the record levels?
Absolutely, Sakshi. As you told, Nifty has regained. It's proven that time and again Nifty has been resilient. But what we can see is we can say the market is matured right now, because one event or one group, some kind of negative news will have a negative impact on the overall market for a limited period of time. Once the dust settle down, Nifty will make its own course of action. That's what we are witnessing in the markets today. Nifty above 18,000 levels.
Okay, understood that. So let's actually move on from the Adani group of stocks now and focus on some of the other buzzing stocks that are in trade right here. Let's talk about first Nestle. Actually, that has given a strong Q4 results in this time around, and the stock is up by 2.2% odd. Even though the FMCG stocks have been in a very volatile and sometimes lackluster move, but Nestle India right now trading at the high point of the day, upwards of over 2%. 19,680 rupees is the current level of the stock. How does one really approach this kind of a heavyweight stock for all those investors who've been holding on for long and perhaps are enjoying this kind of a ride? The stock is nearing 20,000 levels. I do not know how many investors out there do have a risk appetite to go or have the courage to really go in for such an expensive stock, but your own views on Nestle?
Sakshi, Nestle was in a consolidation phase. Okay, but the stock cannot be taken into consideration just for a 1-2 quarters. Normally, I come across investors who holds Nestle in their portfolio for a period of more than 3 to 5 years. In some cases, more than 5 years also. So it is the stock of all seasons, but one cannot expect this is not the stock to refresh on their mobile apps, on their desktop app on a daily basis. This is the stock that will provide some kind of balance to the portfolio. For a longer term investors, I can say very long term investors, definitely a stock like Nestle can be considered into their portfolio for a purely because of the perspective of allocation of their funds towards one thing is to FMCG and towards for the large cap universe is concerned. One can look into these stocks. Normally, investor who have a very less risk appetite and risk averse also, they can consider stocks like Nestle in their portfolio.
Okay, understood that as well. What about stocks in the oil and gas space? They have been buzzing with the cut that has been announced by the government and the windfall tax gains that some of these sector majors may be having. ONGC is buzzing, for example, in trade. CLSA has also come out with a report on ONGC with a target price of 225. Although they believe that the earnings miss were on higher exploration costs right there, there is more confidence on the start of production and the new project going forward from here. And ONGC has the highest dividend yield in the Asia's large cap space as well, is what they have believed right here. On ONGC, 3.9% uptick right now for the stock. Your thoughts?
At present, oil marketing companies and oil exploration companies like ONGC is concerned, Sakshi. Of course, it have a very good dividend yield, and also the stock was, if you see on a longer term basis, if you investor sees at a 3 years horizon, the stock was underperforming when compared with the other peers are concerned. But going ahead, once the crude stabilizes around $80 per barrel, we can see some kind of stability that is going to emerge in these uh, uh, companies like ONGC. But investors with a very long-term horizon only, they can get into these kind of stocks at this point of time. But medium to short-term, it's just a buzz that's created by the windfall tax and all. But I don't see some serious potential upside in these stocks at present in these market conditions.
All right. Any other stocks that are on your radar right now you're watching out for in the current last few days? We've only been focusing largely on the Adani group of stocks and the major developments. But have you been able to spot any of the stocks that you may want to share with all our viewers at this point in time that may be looking attractive?
Sakshi, still banking and financial services is underperforming today also. But definitely investors can look at the stocks, large cap private sector banks like HDFCs of the world, and also investors can look. The defense is a theme that is emerging right now. We have been seeing some great information that's coming from Bangalore right now, how the Indian defense and aerospace is buzzing in the global scenario. So investors can definitely consider the stocks from defense and aviation sector also going ahead.
All right, understood that. Well, thank you so much, Kranthi, for being with us on the show and sharing with us your views on various pockets of the markets that we've discussed today. The markets are inching higher, 140 points uptick for the Sensex, 61,416, and also 18,057 as the current level for the Nifty. We'll keep an eye out on how the markets really move from here on. The FIIs and DIIs have been continuously buying, in the Indian markets, fourth session consecutively when the FIIs have turned net buyers. So perhaps that may also lend some support going forward from here to the bounce that we've been witnessing in the markets. But to track all the close developments, you have to be with us on Business Today TV. Don't forget to subscribe to this channel and also stick with us via our other social media platforms: Facebook, Twitter, LinkedIn, and Instagram. Many thanks for tuning in for now.
How would you think that the government can help, the central government can help with respect to building sports infra in the cities?
We are already doing a lot.